Ladies and gentlemen, good afternoon. It's my pleasure to open the second conference day, which I believe that is going to offer a fruitful and informative panel discussion and treasure of knowledge and experiences that will be shared with the participants. I feel delighted to introduce the first presenter for today, Ms. Mark van der Marel. Mr. Mark van der Marel works as a senior policy advisor within the Payment Policy Department of the Netherlands Bank. Within 15 years of working experience in payments and inter alia, a large Dutch bank, the Dutch Banking Association and Dutch Payment Association, before joining the Netherlands Bank, he is regarded a true expert in payments. Mark holds a Master of Science in Economics. Mr. Mark van der Marel is going to make presentation about the PSD2 in the Netherlands and the influence of PSD2 on competition, innovation, security, and consumer and data protection. Mr. Mark van der Marel, the floor is yours.
Thank you very much, Anita. Hopefully everyone can hear me. Can you hear me?
Yes, we're hearing you.
Okay, great. That works. All right, then I will share my presentation. Let's see where it is. This one. So, one moment, hopefully it'll work. Okay. Does everybody can see my presentation?
Yes, it's okay.
Okay, great. Well, then I can start just before your lunch break, probably. Well, I'm delighted to tell you something about the PSD2 in the Netherlands and how it impacts here on competition, innovation, security, consumer, and data protection. And well, I hope you will enjoy my story. First of all, I want to take a look how the Dutch pay. Well, the Netherlands is a small, flat, and well, quite densely populated country. There live almost 18 million people, well, almost everyone has a bank account. There are 24 million bank accounts in the Netherlands, 32 million debit cards, and 6 million credit cards. Internet penetration is very high. It's 97% of all Dutch people older than 12. And the use of online banking is also very high. 85% of Dutch people older than 12 actually use it. And today's most of them use online banking apps due to their, well, user friendliness and well, it's easy to install them on the smartphone. There are four major banks in the Netherlands, and of course also many smaller banks. But the four major banks, they have a very big combined market share. More than 95% of all payment accounts are serviced by those four major Dutch banks. Less than 1% of all credit transfers is still paper-based, so it's all, well, it's most of it are online. What you see in bank branches in the Netherlands is a sharp decline over the last 15 years. Nowadays there are only 700 bank branches left in the Netherlands, and in 2010 there were almost 3,000 bank branches. So you see them diminishing pretty fast. And ATMs, we have seen also a decline, which seems to be now at a quite bare minimum of almost 5,000 ATMs in the Netherlands. And in 2010, there were still 8,500 ATMs. But still, despite the number has decreased, still 99.54% of the Dutch people still have an ATM within a 5-kilometer radius from their home. So they're quite the spread is quite good. And paying at the POS, at the physical in physical stores, etc. We have seen that the number of debit card payments took over the number of cash payments. So there are more debit card payments now in stores than there are cash payments. And when you look at the online purchases of the Dutch, well, Ideal is by far the most popular payment method. It's based on online banking, and 70% of all online purchases bought by the Dutch in the Netherlands are paid with Ideal. So that's Ideal has a real big market share. And Ideal is a brand which is owned by the Dutch banks. Well, 8% of online purchases are bought with credit cards, 4% by PayPal, and 8% by PayPal, and 4% by other means such as buy now, pay later solutions, etc. When looking at at all payments made in the Netherlands, it's quite it's a large number, of course. It's almost 15 billion payments, excluding cross-border payments, by the way. But there you can see that actually cash payments, payments made at the POS, but also peer-to-peer cash payments, is only 9.3% of all payments. And most of the payments are made by debit cards. And you see that the contactless debit card payments approximately equal the traditional debit card payments where the card needs to be inserted in the terminal.
Mr. Mark, sorry for interrupting you.
Yes.
Can you share the slides on the full screen, and can you move the slides, because we can see only fixed one slide. Only the first slide is here.
Okay, that's strange.
Thank you.
Oh, let's see. Okay, I can see what's happening.
And try to put it on the full screen, okay?
Yes. I will do so. One moment. One moment. Oh no, that does not work. Let's see. Okay. You still see only the first slide, probably, yeah? And
yes, only the first slide.
Okay, then I will stop sharing and I will start sharing again. I'll put this away. So, okay. Then I have to share another screen, no problem. It'll work anyway. Okay, share content. I want to share a
Mr. Mark, if you have some technical problem, we can share your presentation for you, and you can
No,
move the slides if you want.
no. It'll work. One moment, please. One
Okay.
moment. Okay, I will share this slide. Okay, and now. Just one moment. Yeah, it should be working now. Can you see the whole slide?
Yes, it's okay.
Okay,
Just
great.
try to move it.
Yes. Okay,
It's
moved.
okay.
It moved.
It's
Now.
quite okay.
Okay.
Yes, thank
Yeah.
you. Thank you.
Well, this slide I just explained about how the Dutch pay, and now we can move to this slide, which I also explained about the total number of payments made in Dutch retail payments, and now focusing in on the point of sale. You see, the Netherlands is a real debit card-minded country. More than 97% of all payments made at the Dutch tills, the Dutch physical point of sales, are made by debit cards, and only a very small portion is made via credit cards, 0.4%. So the Dutch really love their debit cards for paying purchases in stores. And well, the number of cash has dramatically decreased over the last years, and now is making up to 20.5% of all payments at the stores. And looking at online shopping, as I already told, Ideal really has a dominant market share when compared to the other online payment methods in the Netherlands. Well, just an overview. Now, going to the PSD and the PSD2 more in particular, which is the legal foundation for the single market of the European Union for payments. PSD1, the original PSD, was published in 2007, and the PSD2 was published in 2015, and there probably will be a PSD3, which is expected to be published by the European Commission in 2023. Well, and PSD1 really created a level playing field for payment services within the European Union. It has provided lots of good things. For example, it provided for more competition on the payment markets. It provided for more transparency for consumers. It lowered prices, especially also for cross-border, intra-EU credit transfers and direct debits. And it created a more level playing field on payment service providers for supervision. And well, the main thing, and a very important thing of PSD1 was that not only banks, credit institutions, could offer payment services, but now also electronic money institutions and payment institutions, which have some less strict supervisory regime on them. PSD2, well, it further increased innovation and it further increased competition because PSD2 made it possible that third-party providers could have access to the payment account infrastructure of banks, of account servicing payment service providers. Those third-party providers can only do so when the payment services user, the consumer or the business who holds the payment account, gives his explicit agreement that the third party that his payment data is shared with the third party. Also a big an important factor of the PSD2 is the requirement to apply strong customer authentication, which I will explain later on something more in detail. Okay. Just a picture without dikes. The Netherlands would look like this, but we're talking about impact of PSD2 in the Netherlands. And now I will explain you something about what it has did to competition, innovation, data protection, security, and consumer protection. And the first one, looking on competition. Well, it has increased competition in the Netherlands, however, quite limited. There are several payment institutions and electronic money institutions now licensed by the Dutch Central Bank for providing those new PSD2 services, payment initiation services, and account information services, which they can supply to their clients by accessing the payment account infrastructure of banks. And also credit institutions, so the incumbent players, they provide account information services too. They do so to provide their payment account holders with overviews of the payment accounts they hold at other banks. The PSD2 has increased foreign competition. There are more than 120 payment institutions and electronic money institutions which are licensed by other member states' national competent authorities, which are authorized to passport, which means offer their payment initiation services or account information services in the Netherlands. Well, they are authorized to do so, but not all actually do. But there are some who actually service Dutch clients. The developments differ by market segment. When you look at the market, you see that account information services have proven to be, until now, more successful than payment information services. And account information services are more successful in the business-to-business market. For example, facilitating accounting software than compared to the business-to-consumer market. However, there is increased competition, but it has not really led to shifting in market shares. But well, at least there is more potential competition now, and the market is still in a relatively early stage of development. So things might change over the coming years. When you look on innovation, innovation has increased. It surely did. There were new parties who have developed some new services and also combined already existing services in a different way. And the different way could be based on the possibility of those third-party access to banks' payment account infrastructure. And using it to offer account information services or payment initiation services to the market. PSD2 also helped incumbent parties to embrace API technology, and incumbent players also offer account information services, as I already just explained. And what you see on the market, due to frictions that because of different implementation of PSD2 APIs, it caused the emerge of API aggregators, and a lack of sufficient specified pan-European PSD2 AP standards was caused that to happen. And well, API aggregators do a great job on the market now. But again, the market is in quite an early stage of development. So who knows what might happen over the few years. On security, yes, the security increased, although quite limited when looking at the Netherlands. Before PSD2 applied in the Netherlands, there were already some parties providing payment account information services or payment initiation services, but they used screen scraping to offer their services. And now they offer their services by using more secure and dedicated, by using the more secure and dedicated API interfaces, which the banks offer. PSD2 sets quite strict requirements for business operations and risk management of licensed parties who now offer those new PSD2 services. And payment service providers must use strong customer authentication when a payer accesses his payment account online, initiates an electronic payment transaction, or carry out any action through a remote channel which may imply a risk of payment fraud or other abuses. So the SCA requirement really was a quite big thing in PSD2. But when focusing in on the Netherlands, also before PSD2 actually applied, virtually all electronic payments were SCA proof already. So the SCA requirement in the Netherlands had quite limited effect on security. However, it did for online card not present credit card transaction, because there SCA was not always implemented, and now it is. For consumer protection, well, because PSP are subject, payment service providers are subject to a pretty heavy EU licensing regime, it also increases consumer protection. And consumers face little risks because the PSD2 rules for unintentional and unauthorized payments place responsibility for refunding on the PSP. And the technical and supervisory safeguards, such as the SCA requirement and operational requirements, also limit consumer risks. And before PSD actually applied in the Netherlands, there was some unrest in Dutch society that the new PSD2 services, the payment initiation and account information services, could cause problems among vulnerable groups, because they could be asked to share their credentials with third-party providers. That did not happen. And also partly because of the use of those new PSD services is quite limited, and is especially limited by the vulnerable groups, such as the part of the elderly, people with disabilities, or people who have trouble with reading, etc. However, the PSD2 SCA requirement does not prevent social engineering, which can lead to authorized push payments fraud. And that's quite that still is quite a thing in the Netherlands, and also in some other EU member states. The loss suffered by consumers and businesses due to payment fraud in the Netherlands, and then especially authorized push payment fraud, was quite, well, in relative terms quite low, but in absolute terms quite high. It was in 2021 it was 47.6 million, and which was a quite a large increase as compared to the year before, 2020. And that was that 47.6 million was due to bank fraud, specific to bank fraud, help desk scams, in combination with telephonic spoofing. So a bank employee, a criminal saying that he is or she is a bank employee, calls a Dutch consumer and gets him to transfer money to a so-called safe banking account. This bank fraud help desk scams, the fraud has been compensated by the banks for 92%, and that's really high. But that's also really high because the Dutch Minister of Finance, and who was triggered by the Dutch Parliament, urged the banks to do so, to be less strict and more accommodating, to refund, but not to refund, to compensate the victims. And also in the Netherlands, you see that the banks together, they intensified their public campaigns to make consumers more resilient towards unauthorized push payment fraud. And well, it seems to work a little bit, and hopefully it will do even more in the future. When looking at the other forms of fraud, phishing, almost 11 million euros of damage, and compensated by the banks, virtually all, 98%. And the same applies for damage due to stolen and lost payment cards, and due to online credit card fraud, card not present. And the damage is compensated by the banks unless the consumer or business is deemed really grossly negligent. Then on data privacy, the impact of PSD2. And here's an interesting discussion which you might have already be aware of. PSD2 has quite a complex relation to the general data protection regulation. It has a different objective. PSD2 is about making payment account related data available to regulated third-party providers, and the EU General Protection Regulation is about lawful and carefully handling of personal data. But if parties comply with both PSD2 and GDPR, data protection is perfectly guaranteed. However, the relationship between those two laws is quite complex, and it showed that market participants need practical guidance on how they can meet both the requirements of the PSD2 as well as those of the GDPR. For example, data minimization, which is a core GDPR principle, and it's mostly not yet implemented in PSD2 APIs, while the handling of special personal data, which is sometimes available in payments data from payment accounts, may not yet be in line with the GDPR. And that's difficulty because the PSD2 says that the third-party provider should have access to all that payment account related data that the payment account holder normally sees when logging in on his online payment account. So here's a well, that explains well, the quite difficult relation between PSD2 and GDPR, and hopefully this will be this will be clarified in the future. For example, in a PSD3. To sum it up, impact of PSD2 in the Netherlands. Yes, it has increased competition. Yes, it has increased innovation, security, consumer, and data protection. There are new players on the market, although with still limited market shares, and they provide mostly account information services. There is a large number of those new players, third parties, providing payment initiation services and account information services from other member states who can offer their services in the Netherlands via the European passporting regime. One harmonized EU regime applies to those third-party providers. However, account information services and payment information and payment initiation service are not yet a really large success in the business to consumer market in the Netherlands, slightly more in the business to business market. And it increased potential competitive pressure on incumbent banks. We will see over the next year how this will evolve. It surely did help banks to embrace API technology, and it caused the emerge of API aggregators due to the fragmented API landscape. Also the PSD2 provided stronger safeguards for payment security, such as SCA, and finally the interaction between PSD2 and GDPR proved to be quite complicated. However, the cure came with some side effects, which hopefully will be dealt with in the legislative proposal, which is expected to be presented by the European Commission in the first quarter of 2023. And one of the side effects of PSD2 it was due to the lack of real strict PSD2 AP standardization. It led to an increase of cost for providers of account information services and payment initiation services because they had to connect to many different PSD2 APIs offered by the banks, and most of those APIs are more or less built conform the Berlin Group standards. However, there are still quite a lot difference possible by using that standard. But market parties try to reduce PSD compliance cost and development costs by using those API aggregated services, that you have to use only one universal API which connect to many APIs which are underneath. But the emerge of API aggregators led to parties being able to offer those new PSD services without authorization under PSD2, because the API aggregator which they use, that one is authorized under PSD2. So that's maybe something the PSD3 needs to take care of. And another side effect is that by requiring banks, account servicing payments service providers, to offer third-party providers free access to payment account infrastructure, inhibits investment incentives for those banks. For example, for offering improved services or better functioning PSD2 APIs. So in that light, the work of the European Payments Council on a set-up payment account access scheme, which could entail more services than is obliged by PSD2, is quite interesting. Another side effect is the ban on surcharging for card-based payments, regulated under the interchange fee regulation. And that ban on surcharging meant that that retailers cannot surcharge their customers when they use certain the regular consumer four-party card scheme payments. And that makes it difficult for retailers to nudge their clients towards using more socially efficient payments instruments. For example, when looking at the Netherlands and probably also many other countries in Europe, debit card payments are a more socially efficient way to pay as compared to credit card payments. But now the retailers has lost their steering mechanism to nudge customers to use debit card payments. And that was the story about PSD2 impact in the Netherlands I wanted to share with you. And now it's time for questions. I will stop sharing.
Thank you very much, Mr. Mark, for this impressive presentation, especially for explaining us the impact of PSD2 on the Dutch payment market from a competition, innovation, security, and consumer and data protection point of view, stressing at the same time the side effects of PSD2 that are expected to be dealt with the forthcoming revision of PSD2. Thank you once again. Let's focus on the questions from the audience now. The first question is from Mr. Božo Cvetkovski, and the question is, are companies that offer API aggregators authorized by DNB, or they offer their services to the authorized institution in form of outsourcing?
Very good question. As far as I know, those API aggregators are actually licensed themselves. So, and that has made it possible that third-party providers who offer account information services to the market can offer their services without actually being licensed, because the API aggregator is already licensed. But that's an issue which will be take long in the PSD2 review, which is currently now being executed. based on those results, the legislative proposal for a PSD3 will be presented.
Thank you. The next question is from Ms. Kamala Gurbanova, and it refers to regulative perspective. She said, nowadays, payment gateways, payment aggregators are growing popularity. Some countries have already started to regulate these entities. What about in your practice?
Payment aggregators, I'm not completely sure what is meant with that, but if it's meant that, for example, payment service providers who offer who offer their services to web merchants and offer so that a web merchant can actually accept payments. Those are regulated, but if they only I'm not completely sure if they are seen as only a technical service provider, then they are not regulated. But I'm not completely sure what is meant with payment gateways and payment aggregators. So I'm not sure how to answer to this question.
Thank you once again. And the last question is from Mr. Goran Jankovski. He said,
yes.
Mark, is there a need of better consent management in order the payment services user to be aware of the consent given to some application that he is not using anymore and need to be revoked?
Yes, that's a really relevant question. And it has been talked a lot over in the Netherlands, also in the Dutch Parliament and the Dutch Consumer Organization, because everyone was very, very worried on this one. And that's why most Dutch banks offer their payment account holders a service in their online banking environment, where they can see on a dashboard to which account information service providers they have given consent to enter their payment account related data. And on that dashboard, the payment account holder can revoke his consent. It can click on he can click on the name of the account information service provider, and then his consent is revoked. So yes, that's the Dutch banks provide dashboards for that.
Mr. Mark, thank you once again for this inspiring presentation. And now it's my pleasure to invite Mr. Goran Jankovski, the expert from the National Bank of the Republic of North Macedonia, who is going to moderate the panel discussion about the digital transformation, open banking, and strong customer authentication. Mr. Jankovski, the floor is yours.
Thank you very much, Anita. Thank you very much, Mark, on the answer of the question. It is a really relevant question for the consent management, so I just want the perspective and experience from the Dutch environment also to hear. Thank you very much. So we have now more than 1 hour, 1:45, to discuss about open banking and strong customer authentication. So let me check first, do we have all our panelists on board? So we have three distinguished gentlemen, or three gentlemen and one lady, Mark, Max, Michael, and Nilix. We are here, everybody? Okay. Okay, so we can start. Dear Governor, Vice Governor, colleagues from the Central Bank around Europe and the region, dear distinguished guests, let me wish you a warm welcome to, unfortunately, our virtual environment here and discuss about this interesting topic about open banking and strong customer authentication. It's a pleasure to moderate this panel, to have you on board and have opportunity to share some views on international experience and really on some Macedonian or regional context, put a flavor on this panel as well. National Bank, as our governor yesterday said, has put effective premises for the foundation of the so-called digital revolution and innovation in the payment market through introducing the legal and regulatory framework in force. So this framework may be considered as avant-garde in Europe, in the context of Europe in previous years. Meanwhile, on regional level, Macedonia hop on the board or join the club with open banking concept. And it follows the path of our neighboring countries, part of European Union, Greece and Bulgaria, but also some regional non-EU members who are actually pioneers in that steps. Our Albania and Montenegro previous week announced that they are also PSD2 implemented to go with this open banking concept. What is this open banking concept? Implies the creation or technological development with a view of information of the payment user to the third parties, or so-called TPP. I'm keen of digitalization, and as far everybody here who is present on this conference, I guarantee that it's a desire of all participants in this conference, but it needs to be guaranteed with the maximum steps of security. Taking into the account this, and we as a national bank are also prudent in our environment, and we have strict laws and regulation. We want to just discuss on this panel and give insight to all the participants about what is the scale of this task of open banking and strong customer authentication, what are the key challenges, and what are the lessons learned from a more experienced country in the context that we are discussing here. Before we go to first session in this panel, so I would just like to read or to present you the panelists. So I will start first with the lady, Miss Milica Devlukia, is the CEO and founder of Payment Solved, a regulatory consultancy advising on the regulatory framework for open banking, digital assets and payments. Formerly, she was working with FCA and the UK Open Banking Implementation Entity. Milica is experienced regulatory expert and lawyer with a Masters of European Competition Law. Milica sits on European Payment System Market Expert Group and ECB Digital Euro Market Advisory Group. Milica worked with industry, regulators, and legislators to drive changes in the banking and payment ecosystem that prioritize security, transparency, and inclusion. Our second panelist is Mr. Michael Kalina. He is lead expert in payments, regulation, and regulatory affairs. He was working with different tasks about financial institutions in Holland. What is interesting for the panel is that he was assuring that Rabobank complies with PSD, including all relevant RTSs, guidelines, opinions of EBA that was issued at the time. He is actively involved in the Dutch and European payment community. Most notably, in the context of this conference, he is chair of Dutch Task Force PSD2 review for the Dutch Payment Association, chair of the Data Economy High-Level Expert Group for the Dutch Banker Association, and member of a payment system working group of the EACB, European Association of Cooperative Banks. And finally, we have Max Gerling. He's a strategy and board advisor at Currents, scheme owner for the domestic payment product in the Netherlands, the largest of which is Ideal. He previously worked in a similar role at Dutch Payment Association, a member organization for payment service providers, where he was closely involved with the impact of the new PSD2 services for banks and development of Berlin Group next-gen PSD2 API framework. Max is a business expert in digital payments with a broad background in cards, online, and mobile payments. He has a prior experience in management position and as a business consultant. Max holds a PhD in computer science from the University Nijmegen in the Netherlands. Sorry, Max, if I pronounced that wrongly. Okay, and just a little bit about myself. I'm working as a national bank as a manager of ICT Risk Supervision Department. We are generally responsible for the ICT landscape, ICT security standards in the financial system. And from soon, we took the regulation in the payment industry related to this new concept of open banking, strong customer authentication, and many more. I have been through the first conference, and I have a lot of happy memories during these payment conferences. Unfortunately, this event is only in virtual environment and instead of a beautiful ancient city of Ohrid. So I just can only invite you, everybody of you, if you have a chance. It's really one in a kind place on earth, and I urge you to visit my beautiful lake of Ohrid. That being said, let's start and with the first session, we'll be focusing on open banking. This is a little bit of an introductory session, and in this introductory session, I want first to give the floor to the Milica to give the participant general information for global landscape and initiatives for open banking, so what is on the global scale. And after that, I will just have a short presentation about our local regulation and requirements. And this will only serve as a warm-up for the panel discussion with our experts. So without further ado, I will now give the floor to Milica, and I will try to share her presentation as well. Milica, the floor is yours. Let me just mute you.
Hi, good afternoon. Can you hear me?
Yeah, loud and clear. Just let me share your presentation.
Thank you. And thank you so much for the introduction and also for the invitation to be with you today to share some of my thoughts and experiences about open banking and how within the UK and Europe, I've been involved in a lot of work to make the open banking ecosystem a thriving ecosystem. Could we move to the next slide, please? Thank you. I'm just going to spend a little bit of time talking about a snapshot of open banking around the world, how the policy choices and also design choices have a role in shaping the impact of open banking. And then also I'm going to talk to 3 or 4 different jurisdictions and how they've gone about implementing their open banking requirements and ecosystem. Next slide, please. Thank you. So this is a diagram taken from a commercial firm, and there is a link to where you can find this information because it is updated on a regular basis. But this just shows you the breadth of open banking across the globe. It started, let's just recap. Access to account data has been around for a very, very long time, particularly in the US. But ever since we've had PSD2, particularly in Europe and the equivalent in the UK, we've had a regulatory framework that sits around open banking. And that framework has been replicated across different markets. The best bits have been taken, some of the challenges have been changed, and then other jurisdictions, particularly in the US, Canada, Hong Kong, have taken more of a market-led approach in how they want to go about implementing open banking within their jurisdictions. I think that if you looked at this map 5 years ago, it would have looked very different. And if we come back to it probably in a year, it will look different again. As you'll all be aware, the open banking initiatives around the globe are forever evolving. It's a changing landscape as more jurisdictions look at the benefits of open banking for their own market and then make a determination on how they would like to bring those benefits to their consumers and their businesses. Could we move to the next slide, please? So there are, oh, sorry, this one, thank you. There are policy choices that all regulators, when I say regulators, I include the word governments as well, make when they think about how do we implement open banking? And what's very important is to actually think about at the beginning, where do you want to finish? So there are a number of different policy choices that will not only drive design decisions, but will also impact the outcomes that you have for your end users. They start with choices around a regulatory framework or not. There are considerations around innovation and competition. There are choices around consumer protection. There are choices around access to banking services. There are choices around data protection, security, infrastructure, whether or not there is reciprocity, and that is a big ongoing debate. And there is obviously the choice about scope, what is in open banking and what is outside of open banking. And as those policy choices are worked through and is decided upon, as I say, it's very, very important to bear in mind, where do you want to finish? If you want to bring new firms into your market, you need to think about access to banking services. You need to think about innovation and competition. If you're concerned about consumer protection, then you have to think about, where does liability rest? Who is it going to be apportioned between? All of these policy choices come with different decisions and different outcomes. And then if you go to the next layer down, you come to design choices. Could we move to the next slide, please? Thank you. And those design choices, again, lead to the weighing up between, are you going to have a regulatory or a market-led approach? Are you going to have an API standard? And if so, is it going to be a single standard, as is more so the case in the UK than it is in Europe? Are you going to allow screen scraping within a market, or are you going for an API first or API only approach? There are lots of decisions on what will be mandatory, what is going to be optional. Some of the conversation that we come through later as we have our panel discussion will definitely focus on this discussion between what is mandatory, what is optional, what is in the commercial space, what can be paid for, what can be charged for. And those are very, very important discussions to think about at the beginning of a journey. And I say that because that's, I think, one of the lessons learned that we will talk about in our panel session later. And then there is that conundrum of ease of use and friction and consumer protection and data protection and security. And all of those design choices are then going to shape the impact of your open banking ecosystem. It's going to govern, what functionality do you have? Who are the participants? Is there a level playing field? Is there inclusion? And bearing all of these policy choices, design choices, looking at the end outcome, and then coming back to where you need to start to get to that end outcome. Different jurisdictions across the globe have taken different approaches. And if we could move to the next slide. Thank you. I'm going to start with Europe. That, I suppose, is the birthplace of the regulatory framework for open banking within PSD2 that took effect in November 2015. We're now in nearly November 2022, so that's 7 years ago. And it's amazing to me, having been involved at the very start of the open banking journey in the UK and Europe, how it has grown, how it has been adopted, and also the changes that have happened over time that I'm sure we'll talk about later on. One of the core fundamentals of the European framework for open banking, and I think it was touched upon by your last speaker, is that the access to payment account information and data is for free. There are no contracts or requirements for contracts between the account servicing payment service providers and the payment initiation service providers and the account information service providers. And I'm sure we can debate as to whether that's a right approach or a wrong approach. But what that approach has done is brought new firms to market. It's been the bedrock for innovation and competition because it has allowed firms to enter the market at a low cost to themselves. And that is a debate that is ongoing within the UK and Europe as to whether that is a sustainable model, and if not, how that needs to change as we progress our discussions from open banking to open finance. As I mentioned, PSD2 has the basis of local law in a number of jurisdictions, and even if it's not a jurisdiction that has taken a regulatory approach, the lessons learned from the implementations in the UK and Europe have been foundational in, I think, also shaping some of the market-led approaches in other jurisdictions. The important point, I think, to note about having a regulatory framework and having PSD2 is that although it is one law, the implementation is different across different member states, and that can do and has led to fragmentation in implementations, which is a barrier to entry for some new firms to market, which is technologically difficult for firms to manage, which probably increases cost. And but it also does have the effect of providing business opportunity for some firms. When you look at what the aggregators in the market do in Europe, they are actually taking that fragmentation, putting themselves between the banks and other firms that want to connect, and providing a service that takes the pain out of that journey for new to market firms. And if we should just contrast that a little bit with what's happening in the UK, and if we can move to the next slide. Thank you. So the basis of the UK open banking ecosystem is PSD2. It was transposed into the payment services regulations in the UK, but we also have a parallel requirement, which is an order by the Competition and Markets Authority on the 9 largest banks in the United Kingdom, which aside from PSD2, required these 9 banks to open up access to their payment account data, but they had to do it via an API infrastructure. So there was no choice. It was a legal mandatory requirement that these 9 largest banks would have to come together and put in place an API infrastructure that would allow for the access. So the implementation in the UK actually had these twin tracks of the Competition and Markets Authority order and PSD2. Just to highlight that the competition order only related initially to account information services, and it was the requirements under PSD2 about initiation that was actually then brought into the remit of the order to ensure that there was an orderly implementation for both the CMA order and PSD2. What also happened in the UK, which is slightly different to what has happened in Europe, is that the order required the creation of the open banking implementation entity. And the sort of overarching benefit that we have seen in the UK from that is the having a standardized approach in implementation. Again, we have a standard for the API, but even the experience of the OBIE shows that banks can take that standard and implement it differently. But the powers within the OBIE meant that they could actually require those banks to take a more standard approach. And that has allowed us, for firms that participate in the open banking ecosystem that is managed by the OBIE, to almost have a one-to-many connection, because when you come into that ecosystem, you know that the people that you are taking data from have got the same standard implementation of the API. And there will be challenges to that, I'm sure, because it's not as easy as what I've just described, but it does make for a less harmonized approach. I should also add, though, that that is not the only way that open banking is done in the UK. It is still possible to access via your own API, and to also access is permitted because of the PSD2 and the UK regulations to have a modified customer interface as well. Sorry, can you hear me? Something came up saying that I might need to. Great, thank you. Could we move to the next slide, please? So, moving on from the EU and the UK, I'd like to just touch upon Australia. So, Australia took the lessons learned from Europe, and then decided that it was going to take a slightly different approach, in that open banking in the UK and Europe is sort of like a bottom-up approach. We're going to start with open banking, and now we're moving on to conversations about open finance and open data. Australia started with their consumer data right, which is a top-down approach to say that we want to give access to all data across all different services, so not just financial, but mobile, healthcare, all of these different services. And we're going to enshrine that in a right for consumers to have access to this data, but we're then going to have a phased implementation. And so their implementation has started with financial services. And I would say that's probably based on the fact that they've seen what's happened in Europe and other jurisdictions. And so there are lessons learned that they can take. And they definitely took those lessons learned in their thinking and their implementation. And then it's interesting to see how jurisdictions take best practice and learn from each other, because the Australian approach is the basis for the open banking approach that's now ongoing in Brazil. Could we move to the next slide, please? And so then I want to move to what is, in contrast, sort of named the market-led approach. This is where a jurisdiction has decided it doesn't need a formal regulatory framework, or a formal regulatory framework is not correct for its jurisdiction, and is either relying on a combination of expectations, a loose framework, moral suasion between the regulators and industry, but it is leaving it to industry to come together, both sides of the market, supply and demand, and to find its own way in moving forward to an open banking, or maybe open finance, or even open data ecosystem. These are the approaches taken in Hong Kong and Singapore, also Canada and other markets. Singapore actually did go a step further and has actually published a strategy book on what its expectations are of an API, in order to help shape the outcomes that that jurisdiction is looking for. But it's important to note that within the market-led approach, there is generally a reliance on bilateral arrangements. So if we talk in the terms of fintechs and banks, there will need to be a contract between the fintech and each individual bank that that entity wants to connect to. And that allows for, obviously, the provision of richer data, maybe, and better services, but it can also be a barrier, because the costs within that arrangement can be prohibitive to new to market fintechs. If we can move to the next slide, please. Thank you. And I'd just like to conclude by talking about the United States. So the USA has a market-led approach. It, I would say, has probably got the longest history of any jurisdiction of account access. It's been happening in the US for a very long time. It has been based on bilateral contracts, and there are large companies that exist in that jurisdiction that have provided that technology to connect to banks and then, you know, provide services to consumers. It is based on the bilateral arrangements, but having looked at what is happening across the globe, the US has now come together to form an industry-led organization, one of which is FDX. There could well be others, because it is looking forward. It is looking to move forward collectively on this discussion about open banking, because it can see that there are practices that would work better in the US than they do today, that could provide better data, better consumer outcomes. But as with some of the other industry-led approaches, that limitation of regulator input does mean that those approaches, those market-led approaches, do seem to take longer to reach the sort of outcomes that they're aiming for. And that is obviously to be expected, because you've got two sides of the market negotiating with each other. The last slide, please. Thank you. So I think the thing that I would conclude on is that, you know, it is a journey. And the experience that we have in the EU and the UK, and I'm hoping that my co-panelists will agree with it, is that it absolutely needs to work for everybody. It needs to work for banks, it needs to work for fintechs, it needs to work for consumers, and it needs to work for businesses. We will, in the panel session, talk about things that have not worked so well, but any jurisdiction, I think, looking to move forward with open banking, open finance now, is able to look at those lessons learned and not to repeat those mistakes, so that you don't go through the same pain that we have been through in Europe and the UK, of having this very barren landscape and still trying to get to this very vibrant ecosystem. And I would have to say that we're probably not quite there yet, but we're working actively towards it. We know that there's a PSD3 on the horizon, and we know that there are lots of conversations that will move us through from open banking to open finance. And on that, I would like to conclude and thank you for your time.
Thank you, Milica, for this brief presentation of the global aspect. I have one comment. We should update on the map that also our country is now in the prospect of open banking. So let's hope next time we will have it implemented. Just a little brief of presentation I have it my own regarding the situation in our country, because there are a lot of people from the country also present, and it will be on this conference, it will be just beneficial for them, because our bylaws are in the final phase. So I will just want to give them insight about what is and what was our approach in the country for implementation. I presume that everybody is seeing the presentation. Is it okay? Okay. What is transposed in our domestic regulation regarding strong customer authentication and open banking? So we went with a complete PSD2 set. We take regulatory technical standard for strong customer authentication, so and common and secure open standard for the communication de facto Bible regarding open banking concept and strong customer authentication, and guidelines of the condition for the exemption from the contingency mechanism. So we are discussing about these two, particularly are put in our bylaws or given into the fact that both of them are viable for efficient and quality level of the API framework to function, to open the bank's accounts. So what was our main objective of the local regulation? Development of competition, lower the fees with the new business models. Through developing of this new specialty interface related to payment data in our domestic law, these are Article 124 and 125, which implementation period is through 22 months. So we have implementation period in the country of 22 months. Strengthening the security, some customer authentication is discussing about a certain degree of security and operational security standards, and risk management is discussing about strengthening the security of the payment institution, requiring transaction risk analysis, something which is quite new in the country. Fostering the innovation and keeping the technological neutrality, it's one of the things. But most of the time we were discussing about easiness, the compatibility and portability to so-called plug and play our fintech players from either international or EU payment institution to be able to be easily compatible and portable to plug and play in our financial system. So what we have done, this is some slide which is we done in the beginning. So we take everything which is PSD2 requiring regarding the open banking concept, and we put on a map. So we transpose or map every regulation that was in the law and in these RTSs, and we put it in our bylaw. So soon you will have it in draft version. So just bearing in mind that everything what is in EU is mapped in our regulation, so the landscape will fit one-to-one. What is regarding the strong customer authentication, it's not new in the country. So this is something maybe it was also transposed in the beginning. As I am aware, from 2016, we have strong customer authentication in e-banking and mobile banking channels in our banks. So they are using the knowledge, possession, or inherence as three independent levels or elements. What will be probably new is these dynamic linking practices. So we should just check if every algorithm is taking into consideration the amount or the payee to put the code of authentication. So that's just PSP, or the banks need to review the what is how is this code of authentication code algorithmically calculated. E-commerce will be affected as well as in Europe. We will discuss about that with our panelists. Transaction risk analyst mechanism need to be implemented, or so-called fraud monitoring systems in real time. This was something which was saw that was an issue or something which is coming. So we just implemented in our current regulation regarding Information Security and Cyber Resilience Act that these systems need to be implemented on the online or e-banking or mobile banking channels from 2020. And also exceptions from the strong customer authentication were applicable. So we have certain strong customer authentication exception which are still relevant in our regulation till now, but you know that PSD2 is requiring broader set of these exceptions regarding also the fraud monitoring risk and as well, and so on. What is the open banking really? If we see the current landscape, so we now what we were thinking that is open, now it's closed. We were thinking that e-banking and mobile banking, it's opening the account of the bank or the system, information system of the bank to internet and threats which are present in the cyberspace. But now regarding open banking, we're discussing about the same techniques and tactics, but the customer will not probably will be able to go to the bank at the same level or way, but we have additional third-party players which can also access this customer data as well. What kind of data will be exchanged? So we have these three new players, which is payment initiation services. So it will go the initiation of the payment. Account information service providers, which will aggregate the account information for the payment service user. And we have card-based payment instrument issuers, which will probably the bank will return yes or no, just confirmation of the funds to the transaction which is initiated through some PISP. So it's the same data will be exchanged through this API or open banking interface. What is interesting here, so we have the bank are using just right now internal API, and they have or build their proprietary application for mobile banking or e-banking, and the consumers were using this kind of application. Now we have probably one hybrid mode, which can be the same, but actually the left application on the second part of the slide, we can see now that this probably will be the same channel used for e-banking and mobile banking, but on the top of it, we can see now that the bank probably will be used as a just back office, which will be used for only communication purposes or back office operation, and primary security will be concentrate on keeping this public IP and quality and service of this public IP, but the front will be practically out of the bank hands, and probably this will be a third-party application, either a fintech application or technology application, who will just interact with this public IP. What kind of interfaces, as we can see, and what is the regulation asking is for first to have the bank to develop or PSP to develop dedicated interface. So it's separate new interface to build it from the scratch, which current payment user currently are not using that, or to modify the custom interface. The present interface of the bank should be modified regarding the strong customer authentication requirements, identification of the third-party provider, and so on and so on. So these are two approaches that the banks can use or revise to see what kind of a way they will go. Either they will build something from the scratch, and both of these concepts are having good and bad sides, and it depends what are the strategic decision in the group, mother of the bank, or on the local, if there is any ready solution. So what are the opportunities is this kind of interface to use. The regulation is asking for that. What are the general requirements for the app interface? Consent and authentication mechanism to rely on authentication mechanism of the PSP. So secure communication of the session, it giving tight requirements on the security of the session and the data that will be exchanged. Authentication procedure, how it will be started, and other sensitive payment information, how it will be exchanged. What are the other requirements for the API interface? It's to follow standards of communication, which are issued or governed by international or European standardization organization. So we are discussing probably because two of the companies here on the Macedonian market, KIPS clearinghouses and CASIS, joined this Berlin group. Probably they will go with the Berlin group standards as well on the local level. Then to develop the technical documentation, and this needed to be established before actual implementation of the production day of the API, because the fintech application need this technical documentation in order to build interoperability between third-party provider and the PSP. And if you have technical documentation, that it's clearly that you need a technical platform and support in testing of the functionality of interface. So the banks or the PSP need to provide all these things in front of the beginning of the production of this API in order to be successfully and with good quality. And then after that, this is general requirements for the API interface, and there are specialized requirements for dedicated API interface. So if you build a scratch new API interface, which is not your current or modified e-banking or mobile banking interface, then the regulation is requiring some sets of standards to be established. For example, it asks the same level of quality to be established on this dedicated API interface as the quality you are putting on your online or e-banking and mobile banking interface. So to put that into the context, it asks a lot of KPI, so service measurements, metrics for the service level, KPI, key performance indicators. Then it regards the statistics for them to be published publicly in order to be measured. Then it requires stress testing on the interface. It requires a report that this interface will not put obstacles in the payment or friction in the payment. We'll discuss on the panel later on about that. Then it discusses about happy faces or wide usage of this interface, which is very crucial for this segment to be tested with in a wide usage. And all the problems and incidents were removed and at the core of the problems. So this, in a short, is our requirements regarding for the national prospects. So bearing that in mind, so now let us start with the panel discussion. First session, we agree that we will talk about the open banking. Second session, we will discuss about strong customer authentication. And the third session will be probably the question and answer. So please, if you have any question for our participant or panelist, the last 10 minutes of the panel will be open for the questions. So you can put your question either for the panelists or even for the panel itself. Okay. So we can start now. PSD2 is from 2015. Open banking as a concept in the European Union was originally thought that will be implemented in 18 months. We put 22 months. It's a short period. So, but in European Union, this was postponed several times. So we have postponed in 2017, 2019, and as Nelixa said, we are almost 2015, now 2022, almost 7 years. And it looks like an enormous task to implement open banking. So I now invite Max. First, please take a floor, and Michael, then probably Nelixa, just give us a short comment about what is the size of the task, what is the opinion of the experts. Max?
Yes.
Max?
Yes.
Okay.
Yeah, thank you, Goran. Yeah, the task that we had to go through was enormous, and it was enormous from various perspectives. And I could easily I had to pick one. But one of the perspectives that in particular took quite some time is the specific way that the legislation was formulated. So the payment initiation, the access to account legislation was formulated from a competition perspective. And so it required the banks to come up with a new distribution channel, but the regulation said you have to mimic or replicate, in fact, all functionality that's available in the online channel. Whereas most of the use cases or the implementation done via APIs with TPPs could easily be done with a set of regulations, set of legislation that was better fit for purpose. But that is what it is. But I think the recommendation then would be to keep in mind that when this is all, you have gone all through these legislative requirements, that in fact you are building a new distribution channel for your bank, in addition to the branch office and to the online and mobile banking channel, which are both channels which have direct end customer interaction. Whereas the API channel does not. It's a channel, it's a B2B2C channel. It's a channel used by other payment service providers, which then provide services to end customers. Keeping that in mind is I think important to come up with an API that can be expanded later on after you've gone through the first legislative requirements. And in particular, all the articles about exemptions they don't, well, maybe I'm formulating it too strictly or too shortly, but they took quite some time to find explanation on, and they don't, well, what I wanted to say is that they don't serve any business purpose. But that's well, it's what we have to do with. But at least I think that's what took quite a long time to get around with. The particular way that the legislation was drafted from a competition perspective, not from a business perspective, seeing it as a new distribution channel.
Thank you, Max. Michael, do you have anything to add on this? Let's see. Michael, can you hear me?
Yes, I can hear you, but I was unable to talk to you. I hope everybody can understand me now. I was on mute, but I could not unmute myself. So,
can you add on something maybe on a from the business perspective of the size of the task of the open banking from Rabobank or something?
I have a lot. I can tell you a lot of things about it, but considering there's not a lot enough time, I have to focus. But without scaring everybody, my message would be that if you have not started yet as a account servicing payment service provider or as a bank to come up with APIs, then you're probably already too late to meet the deadline of 22 months. Looking back at what we had to do. So let me simply try to slice it a little bit. So the size of the task is really big. And I know in North Macedonia, you already have the advantage of having, let's say, the lessons learned from, for example, the Nederlandse Bank, the Dutch supervisor, everything they had to do. So question one is can you make a good choice between, let's say, the two interfaces? I would definitely recommend to go for the dedicated interface, so a set of APIs. But the law does open up this second possibility, and it's still in there. Although the EBA now proposes in the PSD2 review to drop actually that possibility. So to drop the fallback option of having a amended customer interface. And personally, both from a Dutch payments association, we are really wholeheartedly subscribing that proposal because we think banks should be incentivized to really invest in good quality APIs instead of, you know, having their adapted interface, which is basically designed to do actually something else than provide the TPP, so the third-party payment service provider, with good data or good functionalities to initiate a payment. So that is one. What are the legal requirements? Two, what is your strategy as a bank moving forward to actually service the whole customer group? We have taken the approach that TPPs are actually a customer segment in themselves to be serviced by us because they provide services to our end customers. So we share, let's say, the consumer. That gives a completely different dynamic on how you proceed and provide functionalities and services to that group. And that goes, you know, all the way back to actually co-create with a couple of those TPPs, building the APIs and making sure the APIs are really up to par or even better, which is what we have been striving for. And then then you get the nasty questions coming back to the size of the whole task. What is actually required to provide in those APIs, or what services? So that's not only, you know, having that interface, but what type of, you know, payment initiation services are actually required. For us, it went down like you need to provide everything that is already available in your, let's say, normal customer interface, meaning simple credit transfers. You need to provide batch payments. You need to provide international payments, cross-border payments, recurring payments, etc., etc., etc. So it's a multitude of types of payment that you need to provide through those APIs, and that's only the payment initiation service. So then you have also the account information service, where you have the discussion, okay, what to begin with is a payment account? These are the nasty questions from a legal perspective and from a compliance perspective, but everybody needs to go through that in order to provide the right accounts for consumers to consent to give access to those third-party providers. And that, by the way, went up to the European Court of Justice. So you really need to drill down on a lot of detail, and in payments, that's where the devil is. So the task you are facing is significant.
Yeah, Michael, can I just add on? You mentioned that. Yeah, you mentioned that practically you take, or the Rabobank take them, these third-party providers under their umbrellas. So we are discussing about building trust between TPP and PSP and the bank. So we maybe you can just clarify about how it was done, and then Max will give us maybe more about that. How can this target be achieved?
Let me start by saying that it helps actually if you are a cooperative bank. It's more like in the DNA to try to cooperate. And secondly, we are a Dutch cooperative bank, meaning we have this typical Dutch thing that you have already heard before today and also yesterday, how we tend to do things. So sitting together with let's say the target group you want to service is a quite natural thing to do, even if you are in certain sense also competing for the same customer. So it's a, let's say, a typical starting point to build to start from. And then what I just mentioned, we have taken the approach that this is a typical, you know, customer group. What is different is that you are actually not talking with the user of the payment services, but you're talking actually with developers, so IT guys. It's a different approach how to talk to them, what documentation to provide for them. So it's also we have learned from them as well as they have learned from us. And I still recall that my first task as a program manager for Rabobank to implement PSD2 was actually in 2015, where I met a few guys. You know, they were trying to get their heads around on what is an API and how do you make money of it, and that was in 2015. So we had to invent the whole wheel.
Yeah, okay. We will discuss about this commercialization, but most of the question we are getting into the national bank is like, can we trust these third-party providers? What will be with security of this data? What if somebody without consent took the data, privacy, and so on and so on? So these are general.
You can and you should trust them. For one, if they have passed the hurdle of let's say a supervisor to be authorized to offer payment services, that should be, you know, telling you something as a bank. So that's one. And by the way, I think the Dutch DNB has done a tremendous good job on setting, you know, really high standards to make sure that you know, everybody is trustworthy. So that's one. Two, actually co-create APIs with some of them does build trust. So that's really important. Three, what is also important, at least in building that trust, not only with TPPs, is also the model that we have chosen. You know, in the Berlin Group standard, they distinguish, let's say, 3 authentication model: redirect, decoupled, which is also a redirect by a specific form, and a embedded model. We, as the inventors of Ideal, we have chosen the redirect model. Why? Because we have seen that authorizing a payment transaction in the environment of the bank creates trust and trustworthiness of the transaction itself. So that whole premise and then building on that has created trust with the TPPs, and actually a lot of TPPs, in particular account information service providers, actually are quite happy with the redirect. They do not want to invest in strong customer authentication devices and tokens themselves. They are fine with having us handle that task. So that is, let's say, one way of creating the trust, and I think we have succeeded, because when we had to qualify for the fallback exemption with DNB, then we discovered that 100% of all TPPs active on the Dutch market were also onboarded by us in our API environment.
Okay, Max, maybe if you have something to add on this building trust and how important is this?
Yeah, sure. At that time, I worked at the Dutch Payments Association, and what I remember from that period is that in the beginning there was basically there was a lot of distrust, both on the TPP side as well as on the bank side. So TPPs were wondering, given that they come from this technical background, are banks capable of providing good APIs? They've never shown that before. Can they build a good developer portal, high availability? And banks had questions. Can we rely only on the use of a digital certificate? We don't know these newcomers. Yeah, they have a license, but there's no contract. Who is liable? Michel, you want to add something to that?
Oh, maybe later on
okay.
the size of the task, because you've triggered another thing which I really want to add for the public. So
okay.
I'll keep my mouth shut.
And what we did as a payments association is that we established a stakeholder group. We in the to the benefit of the whole market, but first and foremost for our members, which could be TPPs as well. So the Dutch Payments Association is open to banks and payment institutions alike. But we organized a stakeholder group where we invited our members. We invited the Dutch TPPs that were in the process of getting a license. And we invited the central bank as well, from, of course, not from a supervisory perspective, but from their policy-making perspective. And in the same way as Michel said, we just created a group that was able to talk directly to each other and get better understanding of what was seen as what were the concerns, what were seen as important steps that had to be taken. And in this group, we arranged for or created a platform where the banks could show the wide usage and the no obstacles provisions that they had to show towards the supervisor. So it's yeah. As an association, you can certainly do something here to get everybody around the table.
Okay, thanks very much. Let me first, Michel, in front of you, just Nelixa. She's first. Nelixa, you're welcome.
Thank you. Thank you. I would say that I concur with all of the examples that are given by Michael and Max, but I just a couple of points I'd like to add. One is the size of the task. Yes, for Europe, it was massive, but then you had many jurisdictions all trying to do the same or similar things at the same time. You obviously had those nuances of local needs and requirements. So absolutely don't underestimate the size of the task, but please bear in mind that you're looking at a single jurisdiction that can take the benefit of API standards and lessons learned and hopefully move forward at a slightly better and quicker pace. And I think an important point to make is that one of the challenges of the size of the task within Europe was not an API standard or setting up an API. That is not the difficult bit. It's the connecting to internal systems that for account servicing providers was really challenging. Because and this is particular, I think, to the ecosystem in Europe, but it has organizations that have been around for 100 years who did not necessarily have the right technology to make it easy for themselves to connect to the new API technology and have that coexist with their internal systems. And the other point I just wanted to make on trust and collaboration, absolutely, co-build the standards, get round the table, but the experience that we had at open banking was there was fantastic collaboration between the developers, because they're all in a room talking about standards and getting together and planning and making everything wonderful. But that has to flow up as well as flow down. It is still challenging, I think, in some markets to say that there is trust between the banks and the fintechs, or the ASPSPs and the AISPs and PISPs. It's got to be a whole ecosystem mindset. And obviously, one of the challenges and drivers European was this, no contracts situation. But I think it's important that industry takes comfort from the fact that nobody is being allowed into this ecosystem that is not authorized and supervised by the regulator and the central bank. I used to work for a regulator. They're very risk averse. They're not going to let participants into the ecosystem that bring risk. And although it's not easy for industry, please take comfort in the bank that your regulator, has vetted these firms, has imposed requirements on them, and will be supervising them.
Yeah, true. We have similar problems with the child steps when we have e-banking and mobile banking and having interfaces that were not so good. And in that segment, they were issuing the whole system of e-banking in the country. So they're posing systematic risk on the habits that the payment service users are having. So in this network segment, your secure as a weakest link. So if we have fintech incumbents or fintech players who are not worthy, to enter the ecosystem, it's mandatory, or the ultimate prospect of the regulator not to put them into the market. So they will have to prove that through regulation and supervision, then afterwards, that they have certain minimum sets of standards to join the club. Michael?
Yeah, two things to add to, let's say, the size of the task. One was I recall that we ran into a very typical problem, but it's just good to realize that the consent of let's say the payment service user or the account holder is actually to a specific third-party provider. So let's say, for example, an account information service provider per account. So what we ran into in our API gateway, that it actually wasn't able to record that consent on that level. It had consent management, let's say, on consent level, so on an app level or a difficult party. So that will be more like the customer. So at first we tried to work around that, and then in the end we ended up with a completely different API gateway. So that's one of the things you really need to go through to see the whole side of the tasks that you are facing. The second thing is that from a, let's say, evidence point of view, we were, as Rabobank, really stretched by DNB to submit all the evidence that we really were qualified to have to be exempted from the fallback. So that costs us really a lot of time to invest in, coming up with documentation or creating actually the documentation. So that's from a, let's say, supervising legislatory point of view, something you really need to realize actually that the fallback exemption is not just an exception. If you have a strong supervisor like DNB, then you have to have a lot of evidence to qualify for that exemption. I believe we are still the only large bank in the Netherlands to actually have that exemption. The other banks do not. So they provide both the interfaces, even if it's a fallback.
Michael,
do not underestimate that one.
Okay, just one short question or comment. You mentioned that Rabobank went with dedicated API.
Yep.
What was, or do you know, was it even a question go through modified customer or dedicated API?
Yes, it was a question. Actually, I was the one, actually pestering all sorts of managers and security officers here, whether it wasn't cheaper for us to actually provide a amended customer interface instead of that API. I just wanted to make sure that we were still on the right track, because the investments on the API part were quite a lot bigger, and every time it came back as, no, we really do not want to have an amended customer interface. We really want to have good APIs. So that is the way forward. And from a strategic perspective, that is, in my view, the only viable answer, actually. So
thank you very much.
It was both a belief and a business case.
Alexa.
Can I just add to that? And I absolutely concur about the point made about the strategic perspective, because one, I can't comment on costs, but from what I've heard in the market, I'm not sure that it's any cheaper to have a modified customer interface than it is to set up an API, given all the ongoing challenges. But if you look at what is the direction of travel, particularly in the EU now, the discussion is that we will be API only. For various reasons, including security, consumer protection, better outcomes, but also scalability. if you want to move forward from open banking to open finance, then, you know, in my view, you're better off starting with an API first approach, because that is going to give you that scalability as you move forward.
Okay.
What we have seen in Europe, and I'm talking about information we have also from other parties, including TPPs. So from our point of view, what we have seen most banks do is that the more larger banks usually try to have the happy flow on the dedicated interface, so servicing it with APIs, and then let's say the more exotic payment accounts, or let's say branches or subsidiaries, to leave them with a modified customer interface. That's
Okay.
what we've seen in general. A lot of banks do.
Thank you, Michael. Let's move to the next question regarding the removing obstacles and barriers into the payment, or removing friction in the payment. So regarding that, what also EBA announced or published that all competent authorities should on the market follow either the PSP or the TPP are moving through, I don't know, inconvenient customer journeys or unintuitive customer journey where they need to, I don't know, enter their IBAN or something, username and password, or requiring several times SCA, strong customer authentication, to be performed. So it means a lot of friction into the customer journey, or some consent check, license check to be performed in authentication mechanism, which goes from the user journey, something which can be done from 1 to 3 screens and probably less than 30 seconds, in superfluous steps regarding 5 to 15 screens and maybe 2-3 minutes operation for consumer journey. So please, I invite Nelixa. Nelixa, just open up a little bit on that, and we will hear also the gentlemen's as well.
Thank you, Goran. So yes, friction is a big topic, and we could have spent, I think, 3 or 4 hours just talking about all the frictions that exist today. But if we break it down, if we break it down, I think the friction comes in the legislative challenges, because friction arises for industry because a mismatch between legislative requirements. So in the EU, we've seen challenges between PSD2 and GDPR. You have friction because of absolutely the customer journey problems that you've mentioned. You know, how easy is it for a customer to actually use and access the service? And customer journeys, that was something we spent a lot of time on at the Open Banking Implementation Entity. And if you're interested, there's probably all the old diagrams there that tell you how to mitigate friction. And, you know, and one of the big things that the Open Banking Implementation Entity did mandate on the CMA9 to ease friction was app-to-app redirection, because going from app to website was causing friction in customer journeys. I think that another point of friction is the technology and the standards. You know, is it harmonized? Is it standardized? Do you have a one-to-one connection? Do you have one-to-many connections? That also has an impact. You have the implementation frictions of, you know, meeting timelines. Are they appropriate timelines? And then you also have some of the practical frictions that come out after you've implemented. So what we're seeing now is that there is challenges and friction in journeys because of, you touched upon bulk payments. Now we have this concept of trusted beneficiary, but if every single beneficiary in your bulk payment has to be on a trusted beneficiary list, that causes a huge amount of friction. Challenges where different banks have different transaction limits can be confusing and cause friction. So I think that, you know, you can bucket these frictions. They are all solvable for, but they are also all interlinked as well. You know, if your legislation is not landing in the right place, and, you know, my co-panelists Max and Michael will know all the conversations that have gone about whether or not an account payee name should be provided or not provided. You know, all of that causes friction within your ecosystem.
Max, Michael, anything to add on these issues? What is your experience, practical, from Dutch landscape?
If I take it first, and then Max can join. Let's say the building it completely true what Nindexa pictures actually, and we've been through that, and we've gone through that, including, you know, nasty little details. Just one example. Actually, we had feedback from our customers, you know, consumer customers, to have in the end of the customer journey a little button simply said okay when asking to be redirected back to the merchant. So actually they wanted to have that button. We had to remove it again because DNB thought it could be an obstacle. So then in the end we decided to have that button, but still have a, let's say, timer. So if you don't click on that button, then within 5 seconds you get automatically redirected back as well. So those typical, you know, technical discussions we had to have with DNB. That's also the level that we have been scrutinized on the obstacle part on the journeys. So and the second thing is what we let's say that was more like a moving target in Europe, including the European Banking Authority and DNB, is where they were inspired by what was possible on a one-step SCA payment initiation customer journey in the UK. So that is where the OBA had implemented it, and we still had at that point in time a two-step. Why? Because on the customer, you know, customer interface, it is normal to first log in and then authorize a credit transfer. So that was mimicked in the API. So to merge those two, we could only do that actually in the API, and we could only do that with an app-to-app redirect. So that in the end we succeeded in removing that obstacle. I leave it in let's say on the table if it's really an obstacle, but we have been able to merge those two SCA steps into one, but we could only do that in the app-to-app redirect. So we could not do that, for example, and we had to persuade the DNB that it was not safe enough to do that from a app to web browser based environment, because then we had security issues, and that they eventually they agreed with us that you know, based on security, we could only do that on an app to web redirect level, and then in the web browser base we still had two SCA steps until technically we were able to do that there as well. But at that point in time where we had the first fallback assumptions, we were unable to do that in that environment.
Max, anything to add further?
No, not really. It's what I could say is that most of the issues and the discussions came from the fact that the legislation is drafted in a way that you have to mimic this capability in the online environment. If it and then providing it for free, because these are all issues that we are not experiencing in a widely used interbanking scheme like Ideal, where we already had app-to-app redirect, where we have SCA one-step, two-step SCA without any issues. But of course, that's all depending on individual contracts and decisions by payment service providers to take part in that scheme. So that's a different setting, but there is something missing, and I think the current initiative that stems from the European Retail Payments Board, the SEPA Payment Account Access Scheme, tries to fill in part of that gap by providing scheme rules, which include not only aspects like product features or UX or processes like dispute resolution, but also allow for the monetization of such APIs.
Okay, we will go through this monetization and commercialization of this API. So Max, practically just for information for the participants. So we are discussing about API economy, yeah. So what does it mean? It's that this information can be traded on commercial basis. So we have a basic standards of data that it's for free, and we have anything that the PSP or the bank can offer it or trade it for economical or commercial activities, for services. For example, in some instances, data can be provided to enhance the accessibility of the bank or the PSP to some certain instances, for example, for boost of the sales as well. But also there are some indirect benefits. So maybe can be advertisement, can be some kind of attractiveness of the bank in the client eye if it's on some places, and so on. So can you give us more insight maybe about this commercialization or monetization of the API? What are the possibilities for the local environment or to monetize this API, not to build them for just, let's say, just regulation purposes and to gather the payments and give customers additional benefits? What is the other approaches or choices that you have it in the market?
Well, what I can add to what I already said about that is that there is really a difference between account information and payment initiation service in this. Because account information services are, well, I would say simpler than payment initiation. That's the background of that is that payment initiation services are operating in a two-sided market. You have not only the account holder involved as the payer, but also the merchant or other beneficiary of the payment. And these make it difficult. This two-sided dynamic makes it more difficult to come up with a successful service. And there are schemes like the SEPA Payment Account Access Scheme or others try to overcome that gap. But maybe also looking at the clock, it's good also to give the word to the other panelists on this.
Nelixa, Michael, you want to add something on that? On monetization and commercialization of API?
Yes, I do, but I'd like to give the opportunity first to Nelixa if you want.
Oh, sure. I would simply say that if I absolutely understand the challenges that the banking side of the industry have had in having to set up these APIs and the cost, but part of that sort of overarching discussion goes back to what are your policy drives in a jurisdiction and what do you want to achieve? So what is the argument for having that core of data at no cost, but starting the conversation, I think now with all the lessons learned of, not repeating those mistakes of because it's free and the banks can't make money or charge for it, they're going to treat it as a compliance exercise and not put up good APIs. And I think the conversation now is about how do you bring those incentives to ensure that you have well-functioning APIs, because that moves you away from some of the issues about fallback and modified customer interfaces. So I think the discussion should be around the core that is for the fintechs and new to market firms, at no cost, but then probably I use the word because it's different for different jurisdictions, some sort of scheme that sits around it that brings the the expertise and the governance about a framework that allows for participation and proportionate contribution.
Thank you, Alexa. Michael?
Great points. I would like to let's say highlight the commercialization of APIs from let's say more a commercial perspective. What we've seen, for example, in Europe, including the Dutch market, that in particular the first APIs were actually providing exactly that as was legally required. So, for example, Article 36 of the RTS on FCA says if the PSU is not present, then the TP is allowed to gather data from the bank 4 times a day. We had a fair policy on that, so there was no ticking the box on which TPP actually had already 3 times access that day, and then after 4 times blocked away, which could have been legally permissible, but we didn't feel that was the right direction to go. That is not to say that there is no possibility to have actually APIs that the bank can actually provide as a premium service. So having a contract with the TPP and make money of it. Actually, we have bookkeeping software providers that are officially authorized AISPs. So who do have a license to get account information from our clients, who actually are using that license to gather account information, but at the same time using our, let's say, premium service on account information, and pay for it as well, because that one has for one richer information. That's one, and they can do it as often as they want. So there we can have agreements with them on, let's say, the volume, etc. So it's definitely feasible, and then you can of course build upon it. So actually provide completely new APIs that services that were not offered before. So at Rabobank, we have, for example, a business instant payment payout service, which is for large corporates to send in their payment initiation transaction, and they are processed unauthorized, quote unquote, because they authorize it in their environment. And we execute it on a, let's say, execution-only basis. So the authorization step that's normally present in our environment within Rabobank online banking is skipped, and it's completely secure with the certificates, etc. And then their beneficiaries, so the recipients, have their money within seconds, because it's also instantly processed on the instant payments rails. So, and that's an API that's currently really attractive for large corporates. For example, insurers and others who want their customers to have money in a frame of time, seconds.
Okay, Michael. Let's move to the last question on open banking, which is relevant. A little bit was touched upon on the previous presentation. So we have opinion on EBA, or the discussion started, what should be changed in PSD3. We are in implementation of PSD2. We have a plethora of API which serve the way, they are proven that they work, and so on and so on. But from other perspective, we saw high, practically fraud rates of APP, authorized push payments, where we can see that the humans are still the weakest link into this I don't know what can I say, new secure environment that was put in PSD2 and so on. It looks like that the education of the public, or this public-private coordination, needs still to be coordinated and developed in the not just European level, but every national level, because customers need education and time to be aware of the benefits and also to the risk that this new technology and new application and fintech is bringing. Ms. Milixa, can you please give us insight about what are the lessons learned and what should be changed, and then we will just share a few comments with the other panelists.
Absolutely. So I think the lessons learned at the very high level is don't underestimate time to implement, work on cooperation, have a baseline for what the access is and what data should be provided. Look at liability, and I'll come to liability separately in a minute. But also for open banking payments, think about a refund mechanism. If you want open banking for e-commerce, you're not going to grow open banking payments if there is no refund mechanism, and none of that is built into PSD2. And then before I pass on to my co-panelists, because I am conscious that we've got all of SCA still to cover, I wanted to talk about liability and fraud. SCA mitigates fraud. You know, the data across Europe tells us, you know, payments that are made without SCA are 5 times more likely to result in fraud. But what happens is that fraud doesn't disappear. Fraud moves. And what we're seeing across, particularly the UK, but I also think across Europe, is that fraud has moved to authorized push payment scams. You know, social engineering, I can't remember the phishing where you ring people, but the payment is authorized and therefore it's not covered by the PSD2 liability regime because it's not an unauthorized payment. And therefore we are challenged and we are working through this. And so I can't give you the solution is that how do we mitigate that, protect consumers, allocate liability, because this fraud is equally not just a fraud on the consumer, but a fraud on the bank. It's very hard for a bank to say to a customer, are you really sure you want to make this payment? Do you definitely want me to make this payment? Maybe you shouldn't make this payment. You know,
that will be friction, obstacles.
Yes, exactly. And also, and we have technological solutions, and these also have an impact on an open banking environment. So within the UK, we have confirmation of payee. But actually, it's not so easy when you have to connect a confirmation of payee system into your open banking ecosystem. And so that can cause friction. So, you know, I've highlighted and we've talked extensively about what didn't work so well, what could be done better, what do we think about? But I think it's also worth looking at what is happening in the overseas open banking ecosystems today. And then how can a jurisdiction who's thinking about implementation try and front run those problems and mitigate them? You know, over time, those solutions will appear. I mean, in the UK, we have a regulatory response to authorised push payment fraud, and there's a consultation ongoing. But it is an evolving landscape. I think that's the thing I'm trying to say is this ecosystem never stands still. There's always going to be something more that needs to be thought about and dealt with. And maybe that's a good thing, or maybe that's a bad thing. But I'll leave that up to the audience.
Max, Michael, anything to add? What should be changed?
Well, at least from the evaluations that are currently underway, there are some aspects that are brought forward, in particular on the interplay between PSD2 and GDPR. It was already briefly touched upon, but it seems that the requirements from the two types of legislation are not compatible, and that that banks now are in a position where they ask themselves, or they're asked by the supervisors, what is it? Are you adhering to the right type of legislation when it comes to delivering data? But it's a different topic. Could probably, and I think Michel can do as well, talk hours about that. So, but it's definitely something that, and then the commercialization. But we touched upon that quite extensively. But that's also something that is mentioned in the first evaluations here in the Netherlands.
Yeah. Let me highlight just actually three things. One, as Nelixa perfectly explains, that fraud is fraudsters are simply switching to different MOs, modes operandi. So what we have seen first is unauthorized transactions as being the target for fraudsters has switched to let's say bank help desk fraud, which is actually something the bank really can do nothing. Nothing is maybe too much of a word, but we don't have much tools except for educating the consumer and business clients not to fall for those sweet talks for fraudsters. But it's difficult. So you could ask yourself, why the hell did Rabobank actually agree to refund actually victims of these kind of fraud? And for us, the biggest motivation is actually that they were abusing our reputation, our name, and even our email accounts, which look sometimes really similar, or they actually use our phone number. They mimic that. So most of the victims are to be pitied that they fell for it, and those scams can be really advanced and really tricky. So that's why we still compensate them, and as long as it's within reasonable levels, then we still feel fine to compensate, unless of course the consumer or the client has been really grossly negligent, swinging around with his or her PIN codes, including the pass. Okay, that's one step too far even for us. So that's on the one thing. Two, the current liability regime in the PSD2 is, from a legal perspective, pretty clear cut, I would say. So it's clear where the roles and responsibilities lie. However, in practice, we as a bank usually do not contact the TPP if there is something fishy, unless we have a fraud case where we have a lot of signals that it is really a fraud case. But if it's let's say unintended by the customer, and maybe the TPP did have some sort of a problem or execution malfunctioning, we simply reimburse the client, and that's end of story. Because it's too much trouble to let's say for 30, 40, 50 euros to do that. So the liability regime is clear, but in the end, usually the bank pays. Period.
Michael, yeah, just a brief comment there. How much is technology helping us in that matter? For example, machine learning, differentiating the abnormal patterns. Now we have technology that can, I don't know, see the pattern of behavior, normal or abnormal spending patterns, and IP addresses, impossible travel, and so on and so on. How is this technology will be able to avoid this strong customer authentication? And it's a question from another session.
Yeah, it's a really good question. I am convinced that it is impossible to do without artificial intelligence in the near future, just to make sure that it's still worthwhile the money. So to do it in a cost-efficient way, we really have to rely much more on machine learning and AI. And those are big developments on that part. So that is completely outside the payments domain. So it's typically with, let's say, financial and economic fraud. So actually the firefighters of this bank when it comes to fraud. So it's a different department. And the developments there are big and really fast. So I'm trying to stay ahead of the curve, but it's something we are looking into it and already investing in it because the sheer volumes are getting too big. But what you have seen from the presentation of Mark on the model is that in absolute terms we do have fraud, but if you relate it to the amount of transactions and volumes of transactions we do as an economy, it's still pretty low. So it also has a let's say a balance between the risk averseness you have and your risk appetite versus the cost to society, cost to customers, and the cost to banks. So that's also what comes in it. And what we have seen is that one bank usually currently cannot do it alone. So if you want to see those fraud patterns better, you have to cooperate with other banks.
Private cooperation. Private-public cooperation, and so on and so on. Okay.
Yes.
Thank you very much for your insight on open banking. I'm sure that we can talk a lot about this topic. So this panel it's already going to the end. So let's just discuss 10 minutes more about strong customer authentication, and let's touch upon a little bit. This consumer or compliance need to perform strong customer authentication, and what we were discussing about the customer journey and a frictionless payment into the market. We discussed about this new technology that can help a little bit to remove these kind of frictions, but what do you think? What is the scale of the task here in the country, for example, to implement this strong customer authentication, bearing in mind that also two of the biggest master Visa international companies are also in the market? We will have definitely some issue, but what is the scale of that task? Implementation of the strong customer authentication with a significance on e-commerce transaction. Please give us insight, every panelist. Maybe we can start with Michael and then move forward, Elixir and Max.
Well, if I start off, well, of course, the impact is depending on your starting point. We have seen with merchants, so typically on the e-commerce side, as Mark already pictured, we have a very strong and secure payment product called Ideal. So it's got a biggest market share of all internet payment products. So actually, when it came to implementing strong customer authentication, it was for the online card transactions. So that 0.4% of all transactions done with credit card in the Netherlands. So the challenges there, although limited in the what we had to do, were much more of let's say communicating with both the schemes as well as with the merchants themselves, knowing that the merchants were actually outside of the reach of PSD2, so they are not regulated. So it's the payment services that are regulated. So if they had built their own websites for credit card transactions and they were not using a PSP, then officially they would say, well, I'm not impacted. So we had to convince them to do the right thing, let's say. So that cost about something of a time. And then secondly, we have also encountered merchants that actually were seemingly not so interested in their own conversion rates. So instead of offering really good SCA compliant payment possibilities, they would sometimes, you know, lay down their heads and accept the fact that sometimes the people would not actually pay, in particular if there was no possibility to pay with Ideal, then sometimes consumers simply lose interest in the product and go elsewhere. So there was also a discussion with them. And by the time the deadline came where we really needed to have SCA, so including a possible step up and make sure that we have strong customer authentication in place, we were a little bit worried that you know, we would see much more declines of transactions, and it did not happen that much. So the customer impact on that part was less than we feared. But it took us much more time to convince, let's say, the market to you know, to move into SCA, in particular in the Netherlands. Other countries where we are also active, like Belgium and Germany, that was a different story.
I think
Okay, Nelixa?
yeah, I think I would actually just, you know, obviously agree with everything that has been said. The timelines for implementation of SCA were totally underestimated by all regulators. But the reason for that was because I don't think it was appreciated the complexity of the market, the number of actors that had to be involved, because obviously PSD2 talks about ASPSPs and AISPs and you know, and that's the regulated market. But in the card ecosystem, you have the card schemes, you have the acquirers, you have the issuers, you have, you know, non-bank issuers, you have the merchants, and you have the consumers. And all of that ecosystem is connected by contracts, but also by technology. And there was all these different bits of technology that had to sort of evolve and change and come together to one, implement strong customer authentication, but also to allow for the exemptions. That's a huge complexity in that ecosystem. And, you know, having said that, you will benefit from the fact that the card schemes have done it. So, you know, so that implementation can be sort of, you know, rolled out to different jurisdictions as and when they require it. All of the lessons learned can be taken, but the impact that I think it is very particular to any jurisdiction is one, merchants adopting and understanding why they have to adopt it, and two, consumers actually becoming familiar with it and wanting to use it and not having that impact on cart abandonment, because it's that friction that is obviously of concern to merchants and then the rest of the industry. And if these transactions are not flowing, people are not making money, and that's why merchants often are reluctant to have the SCA implemented. But it is from the very start having that picture of this is everybody in this ecosystem that has to come together and work together to make it work and to implement it in whatever timelines are given. And then obviously you have the impact of what might be exemptions that impact the open banking ecosystem as well. So because there's e-commerce transactions as well. So that's another complexity to bear in mind. And I've talked a lot about complexities, but it's not totally bleak, because as you can see, it can be done. It has been done. And your market can benefit from all of the lessons learned so that hopefully it's a smoother, easier implementation.
Okay. Max, can you, do you have anything to comment on this? Because it's time to close the panel as well.
Yeah, I see. And given the co-panelists, there's so much expertise around the table here that it's difficult to add something to it. Maybe one thing on authorized push payment fraud. We're focusing on SCA in this respect. But as Nelixa says, the confirmation of PE is another mitigating measure to to target that type of fraud. And that might be the reason that we don't, well, although we're not free from such fraud in the ideal payment scheme, but we don't see it that often. And that's because the payee, the beneficiary, has always gone through an onboarding process as well. So it's not only the security of such payment systems not only comes from SCA, but also from the onboarding of the beneficiary side.
Okay. Okay, from the participant, there are two questions regarding, there is a comment that also Clearinghouse is a member of the Berlin group from the 2021. It's in plenary and open finance task force. So this is something that we already mentioned. Where should victim of payment fraud here in Macedonia present his complaint? Governmental, central bank, or customer organization? From Nikola Paunkovski. That is something internally and nationally. Probably we will not discuss this on panel, but for the first thing, yes, definitely it will be the national bank then. Regarding what is the market share of open banking operation initiated by the banks in the role of payment institution or TPP? I'm not sure that it was also covered by the first presenter from the DNB, but do you know what is the, I don't know, operation initiated by the third party or vice versa, initiated transaction by the bank? I don't know, 10%, 15%, or maybe more. Initiated transaction through TPP in general.
I don't have figures, but I think what I can say, and which I think is interesting, is that, and I can give the UK Markle, is that banks don't seem to have availed themselves of the opportunity to become TPPs in this market. You know, if they talk about commercial opportunity and the ongoing ecosystem, the fact that banks own the banks have the accounts, they have the customers, they have the data, they have the technology. It seems that they are really not entering into this ecosystem as TPPs. And I honestly have to say, I think it's a lost opportunity for banks.
Okay. Okay.
One comment on
Yeah.
that, and that's simply.
Let's go on, Michael.
Yeah, from an economic perspective, actually, we of course we have also been looking at it from a commercial or opportunity side. So we do provide ourselves account information service. So customers from other banks can actually look at account data in the Rabobank app. So that's one. But we actually have never got around a solid business case for the payment initiation service. So that one's too negative. So we didn't even bother to try. And when it comes back to the account information service, that we are discovering that let's put it mildly, that a lot of our customers seem to be quite happy to have, let's say, a banking app from Rabobank, ING, or ING and ABN AMRO, or HSBC and us, for example, instead of having one app to look at all the accounts. So that's the whole premise on the account information service from a consumer point of view does not seem to meet that much of a market demand currently. It's typically the bookkeeping parties that currently are, you know, the biggest users of our APIs. So we have tried as bank, but we are not succeeding in having, you know, a really viable business case on both those two services. But new services can come up.
Okay, thank you very much, Michael, Nelixa, Max. Thank you for the time that you separate from the obligation and come to, and it was really joy to have you on this panel. Unfortunately, we are not in physical format, but this virtual environment. Hope to see you, everybody, on some other occasion. To the guests and to the participants of this conference, I'm really just happy to see that we cover a lot of interesting topics here on the panel, and we bring something to think in the future. So that was our global and international context and a little bit of our regional and Macedonian flavor here. Once again, I would like to thank to all the panelists and send all kind regards. Thank you and see you hopefully on the next conference. Now we will have, I will just announce a break maybe of 5 minutes. And then in 2:45, we are closing, we have next session, our Vice Governor, we're having a close remarks. So thank you, everybody. 5 minutes break.
Thank you.
Bye.
Thanks. Bye.
Bye.
Good work.
Ladies and gentlemen, I feel delighted to invite the Vice Governor of the National Bank of the Republic of North Macedonia, Ms. Emilija Nacevska, to join us and present the concluding remarks and to complete the conference. Ms. Nacevska, the floor is yours.
Thank you, Anita. Distinguished guests, speakers, panelists, ladies and gentlemen, good afternoon. It is indeed a special privilege and a pleasure to address you at the end of the 14th Conference on Payments and Market Infrastructures, Flourishing Digital Payment Future, especially after the last very lively panel discussions, which I enjoyed a lot. Holding the 14th traditional conference in cooperation with the Netherlands Bank, and at the same time the second successful virtual conference, once again bears testimony of a genuinely fruitful cooperation and strong knowledge and experiences between the exceptional expert minds. This year, we have raised many interesting issues, but let me summarize and build on the things we have said and concluded in the past 2 days. During the opening address, we heard from our esteemed governors and the director of the Payment and Market Infrastructures from the Netherlands Bank that the COVID-19 pandemic once again has confirmed to us that we are already in the era of the digital world. We all witness the changes imposed by the latest payment trends driven by technological progress, which enables new opportunities for consumers to initiate payments and follow more easily their spending behaviors. Governor Anita Angelovska-Bežovska emphasized that the trend of growing payment digitalization is increasing on a global level, and it is also increasing in our country. The open banking opened up an array of opportunities for innovation. All this allows consumers to benefit from more and better choices between different types of payment services. Central bankers are aware of the digital transformation, above all because of their roles in the process, given that they should lead and communicate with the public the payment digitalization progress. She pointed out the importance of the new loan payment services and payment systems, which created a regulatory framework to encourage greater competition and a wider range of payment services for citizens and companies. The Innovation Gateway, created in 2019, which is a platform for dialogue with the fintech sector, as well as the first national strategy for fintech, which will be adopted soon. The governor of the National Bank of Serbia, Ms. Jorgovanka Tabaković, emphasized that smooth functioning of payment system is exceptionally important for the stability and efficiency of the financial sector. In this context, she pointed out the importance of the initiative the National Bank of Serbia has launched with some countries of the region, including the Republic of North Macedonia, to cooperate closely in the cross-border payments area, thereby strengthening further regional cooperation and increasing economic prosperity. Ms. Inge van Dijk, Director of the Department of Payments and Market Infrastructures at the Netherlands Bank, speaking about the role of central banks, in her address emphasized the importance of maintaining a strong and secure payment infrastructure in conditions of greater digital dependence, as well as strengthening European and global payments in a dynamic international field. They all emphasized that there is no doubt that technological innovation is of a paramount importance in flourishing digital payments future. But payment security, privacy, and data protection are not negotiable. Thanks to the extraordinary interventions of the respectable panelists from the International Monetary Fund and the European Central Bank, as well as the panelists from our central bank, through the excellent panel discussion on the topic Global Search in the Use of Digital Payments, Challenges and Opportunities, it was emphasized that the global economy is going through a digital payment revolution and that the CBDCs are receiving more attention than ever before. Mr. Soderbeck, touch upon several questions that the booster of digital payment COVID-19 pandemic raised in front of the central bankers regarding security, efficiency, privacy, financial inclusion, monetary policy, and financial stability, which laid ground for the impressive explanation from Mr. Terrell on the motivations of central bankers to develop central bank digital currency. The conclusion was that convenient, fast, and easy payments without compromising security are preferred and desirable features that Mr. Veličkovski confirmed with its explanation about the consumer behavior during the pandemic regarding the use of payment instruments in the national context. Considering that the thriving of digital payments encourage countries to undertake activities to boost cross-border payments, Mr. Soderbeck comprehensively led us into the responding scenarios to the challenges posted in cross-border payments in terms of fees, speed, and efficiency. And for the new age, this approach will be completely complementary for the challenges of the central banks in relation to the fulfillment of their current task, monetary and financial aspects, which was explained by Mr. Terrell. At the end, this common thread running through this trend of digitalization was touched upon by Mr. Veličkovski for the regulatory approach in North Macedonia as a response to technological changes. Ms. Anelkos from BIS gave a special contribution in the field of CBDC, emphasizing the importance of the CBDC as a game changer in the international financial system that could trigger greater currency competition. She stressed the need of developing a flexible CBDC design, including interoperability with today's payment methods, respecting the regulatory requirements, and the challenge how to deal with the foreign CBDC by minimizing risk and ensuring the financial stability. In this context, we heard from Ms. Ria Roering that the Netherlands Bank is cooperating with the European Central Bank to explore the possibility of granting wider public access to digital central bank money. The idea behind digital euro is to provide the euro area citizens access to a simple, universally accepted, secure, and reliable public means of payments, giving the people more options for payments beside cash. She managed to bring closer to us the practical use of the digital euro and the possibilities and benefits it offers. She stressed that this would be in line with the central bank's mandate to safeguard not only financial stability, but also to ensure an efficient, reliable, and inclusive payment system. Mr. Mark van der Marel from the Netherlands Bank explained how the Dutch pay at the physical point of sale, online and person to person. He reflected on the impact of the PCD tool on the Dutch payment market from a competition, innovation, security, and consumer and data protection point of view, stressing at the same time the side effects that it has brought. He explained that its implementation in the Netherlands provided entry of new players, increased competitive pressure on incumbent banks, and thus helped banks to embrace new APIs technology. Yet, some challenges arising from its implementation are related to the lack of API standardization, which increases costs for the new payment service providers by requiring more investment in technical interfaces. On the other hand, requiring the incumbent payment service providers to offer free access to payment account infrastructure inhibits investment incentive, which is a precondition for better functioning of APIs. Most of these difficulties are expected to be dealt with in the forthcoming revision of PCD2. Our experts from UK and Netherlands, Mr. Liksa Devluka, Mr. Michael Kalina, and Mr. Max Gerling, brought us lively panel discussions on challenges in the implementation process of strong customer authentication and open banking. In a comparative context, Ms. Devluka reflected on the differences in implementation of open banking concept across various jurisdictions, enlightening the regulatory vis-à-vis the market-led approach. In this context, Mr. Gerling stressed the specific way the legislation in the EU was formulated from a competition perspective, but not from a business perspective. Thus, it requires developing a new channel for interaction between payment service providers, which later on can be expanded to a new distribution channel for interaction with the customers. We heard from Mr. Kalina that the implementation of open banking is tasked with a really big size and how important is trust between TPP and PSP. This trust is the key to successful implementation of open banking concept. With some practical insights regarding the security and cyber resilience, it leads us to the aspects of security of the network, which is equal to the security of the weakest link. At the national level, we are working on the necessary regulation that will reconcile openness and security deriving from the new law on payment services and payment systems. In summary, I would like to express my sincere gratitude to the panelists and lecturers for sharing their expertise with us, and to thank you all for participating in the conference and the constructive discussions that we had. Let me express my deepest appreciation and gratitude to the Dutch Central Bank and its representatives, Crystal, Ria, and Mark, for their support and contribution in organizing this important event. Last but not least, allow me to express my sincere recognition to the National Bank team that supported the conference with strong professionalism and dedication. Thank you all. Hoping to see you next year in live. All the best.
Ms. Nacevska would like to thank you also for this inspiring exposure of the concluding remarks. Dear guests, have a lovely day and hope to see you on the next edition of the conference. Goodbye.